Welcome to the new video of Freedom Blueprint. In this video, I will teach you about time frame alignment. So let's get into the video without wasting any time. How we will frame a setup using time frame alignment. I have already made a video on internal range liquidity and external range liquidity. If you have not watched that, then go and watch that first. When market hit the higher time frame fair value gap, we will look forward trade toward external range liquidity. That means after taking out internal range liquidity, we will target external range liquidity. Now let's talk about time frame alignment. If you are a position trader, then we will use monthly time as our higher time frame. We will use monthly chart to mark internal range liquidity and external range liquidity. Where market will hit our internal range liquidity, we will draw a structure in daily chart and we can take entry in lower time frame, which is 1 hour chart. But if you are a swing trader and you want to hold your trade for 2 to 3 weeks, then we will use weekly chart as our higher time frame. We will draw our internal range liquidity in our weekly chart. When market will hit our internal range liquidity, we will draw our structure in forward chart and we will take our entry in 15-minute chart, which is our lower time frame. But like me, if you are a day trader, then we will draw our internal range liquidity and external range liquidity in daily chart. We will use intermediate chart to draw our structure, which is 1 over here. And then we can take our entry in 5-minute chart or 15-minute chart. But if you are an intraday trader, then we will use our forward chart to mark internal range liquidity and external range liquidity. After market hitting internal range liquidity, we will draw our structure in 15-minute chart and we can take our entry in 1-minute chart. We can also use intermediate time frame to take entry. In this video, I will teach you to take entry in intermediate time frame. Before going in lower time frame, first you need to learn some entry models and I will teach them soon. So for now, we will use our intermediate time frame to mark our structure and take entries. This is a visual depiction how our chart will look like. This is a higher time frame chart. We will draw our external range liquidity and internal range liquidity. Internal range liquidity will be our fair value gap in higher time frame. We will wait for market to hit our internal range liquidity and then we will draw structure in intermediate time frame and we will look for our entry here toward this external range liquidity. Market will hit our higher time frame fair value gap. After that, in intermediate time frame, we will wait for the market structure shift and then we can wait for market to create a range. We will wait for price to come back into discount zone and here we can look for entry at any fair value gap or any order block and we will target these highs. Let's have some real chart examples for the better understanding of this concept. This is our range high and this is our range low. Around this premium zone we have a fair value gap. Once we hit that fair value gap, we will look for short entries. As I told you, we will focus on internal range liquidity to external range liquidity. Once price will hit our internal range liquidity, we will target this external range liquidity. This is our fair value gap. As I told you in my previous video that in a bearish market, up close candle will support price to go lower. And this up close candles are aligns with this fair value gap, so it is high probable. So most likely it will give us a high quality setup. And we have a fair value gap and up close gainers. Once price hit over higher time frame PDA, we will go over intermediate time frame and we'll draw our structure and then we will look for our entries. Right now we are using monthly chart as our higher time frame. So now we will use daily chart to take entry and mark structure. This is a daily chart. Price hit over higher time frame PDA. Now what I'm looking for? I'm looking for the high resistance liquidity run and here we have price took out this liquidity and then we have a true market structure shift. After true market structure shift, we will look for entry. In this case we have a breaker here, so we can use this breaker to take our entry. This entry looks like a unicorn model entry. If you don't know about unicorn model, don't worry, I will make a separate video on that. Price took out high resistance liquidity. We have a structure shift here and here we have a breaker. This down close candle will support price to go lower now. Price hit that level and now we can take entry here and we can put our stop loss above this range high. Market also can fill these fair value gaps, so we will put our stop loss above this range high. Our main target will be range low. You can see we have low resistance liquidity all the way here, so most likely price will take all this low resistance liquidity and you can see price did it. If you are holding your trade toward this target, I will suggest you to take partial at these lows. Always take partial when you get some good profit and move your stop loss at break even. And then you can hold your trade toward main target. Like this. This is USD CAD weekly chart. We draw our range and when we hit our internal range liquidity, which is our fair value gap, we will look for a long entry toward this external range liquidity. We also have a down close candle here supporting this fair value gap. So most likely it will be a high quality setup. Once price hit our key level, we will look for long entries toward our external range liquidity. Here you can see price also create a bearish fair value gap here. Sometimes price can react from this fair value gap and can take this liquidity also. So to frame a high quality setup, we will wait for this fair value gap to fail. Like here we have a bearish fair value gap. We will wait for price to break this fair value gap, and then we will look for long entries toward this external range liquidity. In my previous videos, I have teach you that in a bullish market, price will disrespect bearish PDRS, and in a bearish market, price will disrespect bullish PDRS. So technically, if we are bullish here, we will disrespect this fair value gap. And here you can see price failed this fair value gap, and now we can look for long entries toward this external range liquidity. This is a bearish fair value gap in weekly chart. You can see here we have a stop hunt. You can say this is a high resistance liquidity. Then after that, we will wait for the market structure shift. And here we have market break this with volume. So we can say this is our range low, and now this will be our range high. We can draw a range like this. Once price come back into discount zone, we can look for long entries. Now we have some down close candles. In a bullish market, down close candle will support price to go higher. And here you can see price hit that level and then went higher. We can take our entry at these down close candles, and we can put our stop loss below this range low for the safer side. We can also take entry at this discount zone. Our main target will be this range high, but I will suggest you to take some partial at these highs, and then main target will be this high. You can see how price exactly hit our target. Until price hit our draw of liquidity, we can frame multiple setups here, but I will make separate video on that. Now let's have one more example. This is our daily chart. This is the chart that I use the most to frame a setup. Here we have a fair value gap, a gap between first candle wick and the third candle wick. Once price hit that level, we will look for long entry toward this external range liquidity. Now let's move on intermediate chart. This is the early chart. Price took out this liquidity and hit our higher time frame PDRA. Now what I am looking for? I am looking for the two market structure shift, and here we have. After market structure shift, we have a breakout here. We can look for a long entry at this breakout, and we can put our stop loss below this. Our target will be this range high. Also, we can use this fair value gap to take entry. Our stop loss will be below this breaker or this fair value gap low. I also posted this same setup in our free Telegram channel. If you want to join, you can find the link in the description. Let's have one last example for the intraday traders. This is our range high and this is our range low. We simply find a fair value gap in our premium range. Once price will hit our fair value gap, we will look for our short entry toward this external range liquidity. If your chart is not clear like this, that means this is a not high quality setup. Price came back into premium zone, hit our fair value gap. We look for short entry here toward this external range liquidity. Now let's move on intermediate time frame to frame a setup. This is our 15-minute chart. You can see price hit our higher time frame fair value gap and give us a two market structure shift. After market structure shift, price created huge gap here. We can take our entry at this gap. We can set our stop loss above this up close candle. Our main target will be this range low. For the safer side, you can also put your stop loss at this range high and let the trade run. You can see how exactly price moved from our internal range liquidity to external range liquidity.